Wow. Good evening, everyone. This is James coming to you from Dividend Stock Talk. Today is Wednesday, August 2nd, and it is 10:34 p.m. Here at Dividend Stock Talk, we like talking about dividend stocks that are getting ready to go EX or getting ready to pay out their dividend. However you want to call it, whatever you want to call it. All dividend stock companies list when they pay out their stockholders their dividends. Okay, so in order for you to capture a dividend, or in order for you to be eligible to receive a dividend, you need to be the registered owner on the day of record. So in order to be the registered owner on the day of record, you have to buy the stock on or before the EX date, which is listed, and I'm going to go over that list in just a few minutes for the stocks that are available for tomorrow. And we're going to go through a couple of trades and find out what's cooking and what's good and what looks lovely and all that kind of nice, neat, fun stuff. But at this moment in time, dividend stocks. We look at them in order to find out what is best for us in order to, I don't know, make more money, I suppose. That's the easy way of saying we're here to make money. And we're using dividends as a precursor or as an indicator to tell us what stocks to look at today. Because I found over the years that dividends, and actually companies that pay dividends, have a tendency to move up just before the EX date. So as the stock is getting ready to pay out a dividend, investors have a tendency to go in and buy the stock, and the stock artificially moves up based specifically on the dividend or the upcoming dividend. Now, I've created some software that allows us to take a look at the historical performance and how well the stock has performed doing this particular strategy by 10 days prior to the EX date, pick up a little bit of money on the way to the EX, and then jump on out, sell it for a profit, and then move on to the next company. It's very profitable, and it does not work for every dividend stock. That's why I created the software. Software actually goes through all the data and see what has happened in the past and matches us up with the right companies at the right times, doing what it is we want to do, which is collect more dividend checks, thus make more money. So let's go and see what is cooking today. All right, now as we said, today is Wednesday the 2nd. Now, if we're going to trade something tomorrow, we want to look at stocks that are 10 days away from today, which would be the 16th. Now, the 16th has 35 companies that are going to be paying out dividends in the next 10 days. Now, I'm going to go over a few of them real quick because I'm not going to go through every single one. After I show you a half a dozen maybe, then you should be able to pick up and see what we're looking at. Okay. Expiry Corporation, never heard of them, but they're offering 20 cents. WBA, Walgreens, Visa, UTX, isn't that United Technologies, Spock Holdings, SHW, the Sherwin-Williams Company, RS, who's RS? Reliance Steel and Aluminum, PSX, Phillips Petroleum, all right. Park National Corporation, Plantronics, Pennant Park Floating Rate Capital. Interesting name for a company. Oshkosh Corporation. They make the overalls. Oshkosh Bagosh. Okay, yeah. Oil Dry Corporation of America. Alrighty. North European Oil Royalty Trust. Neenan Paper. Batarian Corporation. MGP Ingredient Incorporated. Kennametal. Enifus Holdings. Horizon Technology. Helmerich and Payne. Honeywell, Hilton Worldwide Holdings, Healthcare Services Group. All right, anyway, you get the idea of who's paying. These guys, they announced their dividend dates here. 8-2, that's weird, AGN. All right, 8-2, which was today. And they're going to go the EX dividend on the 16th. The date of record would be the 18th, which is 2 days later. And the dividend payable date, that's when you're actually going to receive your money or receive your check or receive your extra shares, however you want to take your earnings. All right. That's who's going to be paying in the next 10 days. I'm not going to look at all of them. I'm only going to look at the companies that offer weekly options. That would be weeklies right there. And here we go. WBA, Walgreens, Visa, UTX, PSX, CVX, OS, CMI, Cummings, AGN. All right, so we're going to take a look one at a time. AGN, Allergan, okay. AGN starts the year off at 254. I'm going to pass on this right away. I don't like to get in $200 stocks. I don't care how profitable they are. I can't buy that many shares, and it's really not worth my while to tie up $200 to collect 70 cents. No, that ain't going to happen. CMI, Cummings, CMI. 170, almost the same thing. It's a $170 stock. Do I really want to buy a $170 stock for $1.08? No. That's me. You guys can do it if you want. I can't tell you what to do. COST, Costco. Another $100 stock. Come on. What is this? Costco starts out at 160, trades for a month or so, drops down for 3 or 4 months in the 144, 145 area, jumps up for a month and a half at 156, shoots up to 171, almost 172, drops back down, 158, climbs its way up, kicking and screaming, clawing its way to 182, drops down. Look at all that. That's a big drop. For 180 to 170, that's a $10 drop. Okay. Now she's going sideways in the 161 area. It's a big up day on Monday, Tuesday, Wednesday, because they got the dividend coming up in less than 10 days. So let's see why, or let's see what the seasonality looks like. See if it's worth us getting into. All right, here's where she is. Okay, she's going to continue to go sideways for the rest of the week. So if we want to jump in on Costco for the rest of the week, let's see what they're offering dollar-wise. Okay, at 161 vertical is what we're looking at. $2.19 on a $2. On a $2.50 bid. I don't think so. That's way too much. That ain't worth it. That's odd. All right. That can't be right. Oh yeah, that is right. 219. No, not enough money in it for me. Okay, there's plenty of money in this one, but it ain't worth it because you're just buying time, and then it has to move up in order to make money. So no, that's not it. This is the one that I would normally do, the 157.5, 160, but they want 219 for it. What the most I'm going to make out of this is 31 cents. So I got to put up $2.19 to make 31. No, that's not even 10%. That's not worth it. All right, let's go back to the next one. CVX, the Chevron Corporation. That's tanking. Don't even want to look at that one. PSX. PSX. Well, maybe next week. See, this is not looking good for today. See, tomorrow's the 3rd. And then 4th and 5th, and you're out. UTX. All right, UTX is going sideways, then it's going up. All right, United Technologies. All right, looking at the 120. Let's see what the chart looks like. Standard chart. Standard chart starts out at 106, 109 for about a month and a half, drops down to the 100 area, trades that way for 2 months, jumps back up to the 109 area for a couple more months, jumps up to 110 for a couple more months. Now, for the last 3 months, she's been shining at the 120 area. Okay, she's got a nice dividend coming up. So it looks like we want to go after this one. And let's see what they look like. UTX. The 120. 119. 120. Alrighty. Let's see what we can make out for this one. So it looks like a 18 to 20% return for the next 3 days. 18 to 20% return for the next 3 days is not bad. Put up $4 grand. Most you can make is 850. You break even is 119. All right. So what basically that means is if we're going to do this trade here, we're going to get between 18 and 20% for the next 3 days. I don't usually like to do anything below 20%. But this one, I don't know. Maybe, maybe not. All right. So what's going to happen is the stock's at 120.35. The stock would have to stay above 120 in order to make our 18%. So if the stock goes up, we make money. Stock stays the same, we make money. Stock even has a little bit of room to go down, and we're still going to make that money. Is it going to happen? Is it guaranteed? No, it's not guaranteed. The market maker may wake up in the morning in a bad mood. It's the only number that is controlled by one person, the market maker. All the other numbers, the high of the day, the low of the day, the close of the day, the general public, the buyers and sellers make up those numbers. We buy or we sell. The market maker makes up the number for first thing in the morning. He takes a look at where it closed yesterday, what the volume was, what kind of open interest there is. There's a lot of factors that come into play when trying to figure out what the opening of the day is. But it still always comes down to one person deciding what he wants to buy and sell for. That's the market maker. That's his job. Okay, so this 18 to 20%. All right, so that's one to take a look at. What else do we got? UTX, Visa. Hey, gotta love Visa. Visa starts the year out at 78, climbs for a month and a half. They hit the 82 area, trades at 82 for 2.5 months, and then she takes a nosedive, so to speak. And the beginning of December, she hits a low of 75. Okay, we got that paid for. And then we jump back in. She jumps from 75 in beginning of December up to 101 where she is now. Now, Visa, I have a little bit of problem with this. Although Visa's a good company, it's been around for a long time, and you're not going to lose your money on Visa, I'm going to have to pass. Only because, well, before I give you my reason, let's take a look at what the seasonality looks like. It would appear that this is going to go sideways. Basically, sideways for the next couple of weeks. Alright, so to make money, it's going to be a sideways market. Nope, let's get out of there. The wrong button. Alright, let's get back to where we were. Alright, now we're going to pass on this because she's at an all-time high now. And is she going to go a little higher? I don't know. You don't know. The market maker doesn't know. Nobody knows if she's going to go higher or not. She might not. But the way I equate where she is now, it's kind of like standing on a ladder. You know, where the little sign that says, do not sit or stand on this. Standing on the ladder, reaching for the stars, or reaching for something that's too high, shouldn't be doing it in the first place. That's why I would pass on Visa. WBA. WBA. Walgreens. Walgreens all over the place, but kind of like a tight trading range. She's running between 76. All right. Let's see what she says. WBA. WBA. All right, WBA. We're in the $80, $81 area. All right, she's closed at 81, so she's at 81 right at the moment. Wait, 81. Nice, I like this one. All right, so this is 80 and a half, $80.50, and 81. That's the spread, the difference between the two. You're buying the $80.50 and you're selling it for 81. Most you can make is 50 cents. Now, as the option, you're paying 33 cents for this opportunity to make 50 cents. It doesn't sound quite right, but let me go through the numbers and explain it to you a little bit. Okay. WBA is trading in the range between 79 and 86 for almost a whole year. She dipped down just a little bit to make a low at 75, but now she's back up to 81, and look at that nice little green movement right up there. Does she have enough room to make one more stop? Maybe, maybe not. Okay, we want her to stay above 81. Doesn't give us a whole heck of a lot of room, because if it goes up, we're going to make money. If it stays the same, we're going to make money. If she goes down, we don't have very far for it to go, only down to 80, 81. Yeah, so it's like 3 cents, so that's kind of tight, but still all three different directions. All right, now this one should be a very decent profit. 850 is the max you can make, and you got to put up 1731. So that is just a tiny bit under 50%. So it's like 45% return for 3 days. That I like. Well, let's take a look at the, I think we already looked at the seasonality on this, didn't we? All right, here's where the stock is now. 3 days. 1, 2, 3. Yeah, it's all up. Okay, there's your shot right there. Make you 45%. It looks like seasonality says she's going to go up for the next 2 days, and you better hope it goes up for the next 2 days, because if it don't, look at this. It goes down for the next few weeks after that. That being said, do it, don't do it, it's your own risk. All right, let's see, that's all the companies that we're looking at today. Yep, like, oh, half of them aren't even worth doing because the numbers just aren't working. Now, I'm strictly a numbers guy because numbers don't lie. 1 + 1 = 2 no matter what language you look at. If you buy it before the EX date, hold it after the date of record, you're eligible to collect a dividend. Collect a dividend, sell for the same amount of money, move on to the next stock. Does it work all the time? No. That's why we created the software. The software gets rid of the ones where it doesn't work, and it only sticks with the ones where it does work. So this is James. I'm going to be signing out. I'm going to quickly check and see if I have any questions. And if not, I'd like to be out of here. No questions. Gotta love it. All right. So that being said, this is James signing out from Dividend Stock Talk. We'll catch you the next time, which is tomorrow, because like I said, we're on a 30-day challenge to do a video every single day. So stay tuned. Ask any questions. You have a question, you want to know how it's done, ask. I'm more than happy to share it with you. Okay? Dividend investing is relatively easy. Buy the stock before the EX date, collect the dividend, sell for a profit, bada bing, bada boom. Thank you very much. Move on to the next one.